Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 13th of March 2021 and we're publishing our gold and silver weekly update for the week ending the 12th of March. We also briefly look at political events and economic reports which could shape what happens to the US dollar and therefore precious metal prices. So let's take a look. Firstly, just a brief apology to regular listeners for not producing any videos these past 3 days. Down in part to the fact that silver and gold prices have little changed. There's been oscillation, but they haven't changed significantly. And also because I've been recovering from the rather tiring effects of having the first coronavirus vaccine jab, which, although did not leave me feeling ill, it did leave me incredibly tired, with a very sore arm. Notwithstanding that, all is now back to normal. Gold rose $27 last week from $1,701 to $1,728, having hit a high of $1,740 and a low of $1,677, a rise of 1.6%, but with both the high and the low for the week being a little lower than the previous week's high and low. In sterling terms, gold finished the week at £1,241. That's up £11 or 0.9%. And in euros, it closed at €1,445. That's up €17 or 1.2%. Silver rose 71 cents from $25.24 to $25.95, having hit a high of $26.48 and a low of $25.02, a rise of 2.8%, having reached a lower high but a higher low than the previous week. In sterling terms, silver closed at £18.64. That's up 39 pence. And in euros, it closed at 21.51 euros. That's up 0.51 euros, or half a euro. So whilst both gold and silver gained ground, it was not as much as it had lost the previous week. The gold to silver ratio fell from 67.3 to 1 to 66.6 to 1. Bitcoin has risen just over $12,000 in the last week, and its price currently stands at $59,818, having reached another all-time high at $60,000. The Dow Jones closed on Friday at 32,788, up 293 points on the day and up 1,292 points on the week, following a 564-point gain the previous week. The S&P 500 closed at 3,943, up 4 points on the day and up 102 points on the week, following a previous week's gain of 30 points. And the Nasdaq Composite closed at 13,319. That's actually down on Friday by 78 points, but up 399 points on the week, more than making up the previous week's fall. For those who listened last week, you'll have noted that the Nasdaq took quite a hit then. Brent crude closed at $69.22, down just 14 cents on the week, and WTI crude closed at $65.61. That's down just 48 cents on the week. Clearly, this roughly $70 figure seems to be the aim for Brent, and who knows whether WTI will creep towards that level too. The dollar index stands at 91.67. That's down 0.30 on the week, though it had been much higher earlier in the week. Now, our price trading range last week stated, quote, "Therefore we see gold still under pressure and now trading between 1,600 and 1,800, with 1,550 and 1,800 as outliers. Silver is likely to trade between $24.50 to $26.50, with 24 to 27 as outliers for this coming week. Well, upon opening, gold did rise in the first 2.5 hours and then sharply fell to its week's low at around 1700 GMT, recovering and peaking ultimately on Thursday, fell back again Friday, but recovered most ground in the last 11 hours of trading. There is no question that the week was dominated by two key factors, which to an extent are related. The Biden's $1.9 trillion stimulus package was agreed by both houses and then signed into law by President Biden, and the consequent rising yield for US Treasuries and continuing dollar strength towards the end of the week. But lower yields and a lower dollar for 3 consecutive days contributed to gold reaching its highs midweek. That's weekly highs, not all-time highs. Interestingly, Ross Norman, the chief executive officer at Metals Daily, stated on Market Watch, quote, "It's all about US Treasury yields again, with a firm dollar compounding the problem for gold. Encouragingly, physical demand in Europe is fantastically good, with supply chains challenged. And there's much of the same in China, where gold is now trading at $10 an ounce premium over London prices, though exchange-traded fund demand is comparatively lackluster," unquote. Now, whilst to be fair, it's encouraging to see both gold and silver hold up well, in spite of 10-year notes trading generally between 1.62 and 1.64%. Those who follow technical analysis wizardry may be quite interested in what we're about to say. The 3 major moving averages used by market analysts to determine whether the short, medium or interim and long-term market sentiment is either bullish or bearish or neutral are all currently well above current pricing, which is a strong indication that we are in a corrective period. Resistance is seen at the 10-day moving average for gold at $1,812 and support at $1,670. No difference there to last week. Short and medium-term momentum is positive, and the MACD is pointing to a buy signal. Silver outperformed gold this week, with quite a lot of oscillation, peaking on Thursday, falling back Friday, and recovering in the last 10 hours or so of trading. Silver has formed what analysts call a small but visible inverted hammer, which is interpreted as negative, and could suggest a fall back to $24 if not lower. That said, if it can manage to push above $26 and hold and advance beyond 27, then it will look quite exciting again with 28 and then 30 in its sights. Economic data last week was again broadly positive. We saw that wholesale inventories for January were up from 0.3% to 1.3%. The NFIB Small Business Index for Feb was up from 95 to 95.8. CPI was up in Feb from 0.3% to 0.4%. Initial jobless claims were down from 754,000 to 712,000, with job openings up by 100,000. And household wealth year-on-year for quarter 4 was up from 7.5% to 10.1%. We also saw on Friday a fall in the producer price index for February from 1.3% to 0.5%. So on the whole, overall, relatively positive news. Not enough to get too excited about, but also not something one should be depressed over either. Now, taking a look at what we're expecting this coming week, on Monday we have the Empire State Index for March, Tuesday, retail sales, import price index, industrial production, and business inventories, the first 3 for February and the inventories for January. On Wednesday, building permits and housing starts for February, and the important FOMC announcement and press conference by Fed Chair Jerome Powell. Don't miss that. Thursday, weekly jobless claims report and the index of leading economic indicators for February. And on Friday, there's nothing actually scheduled, nothing of consequence in the US, that is. So Tuesday and Wednesday, undoubtedly the two most important days of the week. Now we suspect that based on the economic data seen so far, plus the increasing vaccine rollout, we would anticipate that the Fed will feed the narrative of cautious optimism and probably scotching the prospect of any additional stimulus beyond what it is currently providing. So where does this leave us for gold and silver prices next week? Well, with the stimulus program agreed and signed, it will take a little time for that to filter through into the economy, and there is already talk of preparations for a major infrastructure plan underway, though we suspect they may wait a month or two before pressing for additional funding for that plan. However, that said, perhaps Biden may be more aggressive than we give him credit for. With stock markets reaching ever-increasing highs and investment monies flooding back into Bitcoin, gold particularly will struggle to capitalize in the coming weeks and become even more dependent on the direction of US Treasury yields. Silver will suffer a similar fate, but then as the economy starts to expand, will benefit from industrial demand, and therefore is likely to perform better than gold. As always, it's all in the timing. Therefore, we're not really altering our trading range for gold this coming week, and we see it trading between $1,600 and $1,800, with $1,550 and $1,800 as outliers. Although we suspect that silver may perform a little better this week, we have to acknowledge the fact that from a technical point of view, there may also be a slight reversal. So with that in mind, we're not really changing our trading range. So we're keeping the bottom end at 24.50, but raising the top end to 27, with 24 to 28 as outliers for the coming week. Now tomorrow we shall be publishing episode 15 of Bitcoin versus Gold and Silver, and possibly a few extra videos over the course of the next few days to make up for the lack of them last week. What are your thoughts on price direction? Do share them, and if you haven't done so, please subscribe to our channel. Thank you so much for listening, and stay safe. Have a great weekend and a prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.